All right, good morning, folks. Happy Sunday. Give me a quick sound check. Hope you're all having a good weekend. As a Celtics fan, today's a big day. Day one of the playoffs. And I've got very big expectations for my Celtics, so I am excited. And aside from that, I am going to lock myself in this office all day long and finish up the cheat sheet. Had a busier weekend than expected. Had a little road trip up to New Hampshire yesterday, which was fun. But all right, good morning, Tiffany, JG, Briggs, Wayne, Claudia. The whole team is here. All right, guys, we'll jump in. I don't want to keep you for too long. I'm sure you all got some chores and all kinds of fun weekend stuff to do. But alrighty, so the big three score here for the indices on the daily chart. It's only getting a little bit worse. Worse means better for the bears. Dow Jones, -6. The RSP, a -4. The small caps, a -6. The S&P is a -5, and the QQQ, a -6. Now, the big story here for the QQQ, two big stories. One, we are below the weekly 21 EMA for the first time since October. Little break of support, and the signals here on the weekly chart, they've gone from green to blue, right, from bullish to neutral, which basically means the bulls no longer have full control over that weekly chart. And then the other story here, for the first time since November 1st to be exact, we have a brand new daily sell signal. So we got sell signals on the daily chart, the 4-hour, the 2-hour, the 1-hour, the 30-minute, and the 15-minute. So the translation is pretty simple. Until things dramatically change, we are in a short to bounce kind of market. We do not want to fight that daily sell signal, and we don't want to fight the squeezes. Right? We love the squeeze. We never want to fight the squeeze. Daily squeeze fired short, and then into this week we have a 2-day squeeze setting up with a target of 408 and a 3-day squeeze setting up with a target of 400. The big round 400. Now, the only thing to take into consideration, we are a little bit oversold. And funny enough, you'll get some of your biggest, fastest bounces. Do I think we're in a quote-unquote bear market? Not necessarily. But you'll get some of your biggest bounces in a bear market. Everybody's short. Everybody's piling into those puts. The market's a little bit oversold. Put it into terms of percentages. Tomorrow morning, the QQQ could gap up, let's see, 415. We could gap up into 430, which would be a 3.5% pop, and nothing really changes. They're not going to fix the structure. They're not going to get a brand new buy signal. So again, keep that in mind going into this week. Expect a few bounces. Potentially expect a few big bounces. And hey, for a day trade, if you've got a 15-minute, 30-minute hourly squeeze, 15-minute, 30-minute hourly buy signal, you can jump in and look for a day trade. You can buy those calls. You can sell that put credit spread. My best piece of advice as far as things are going to hold overnight, I'd remain a little bit cautious holding longs overnight. And I think one really good rule, if you're going to look for a day trade higher, if you're going to look for a scalp, if you're looking for any kind of action to the upside, I think a really good rule of thumb, there has to be a 5-minute buy signal. Now granted, it's a 5-minute buy signal in the face of a weekly chart that broke support, in the face of a daily sell signal, a 4-hour, a 2-hour, a 1-hour, meaning that 5-minute buy signal, it's a little bit counter trend. It's not quite in alignment with our bigger time frames. But at a bare minimum, if they can get a 5-minute buy signal going, maybe from there they can get a decent bounce. That can be a bit short-lived. But even back here, you buy it on the 5-minute buy signal. You take that trade off and the 5-minute buy signal gets canceled. You're not taking on too much damage. So I do think that's going to be a really good rule moving forward. And you might want to make it a 15-minute buy signal. That might work as well. And then the S&Ps here, these spiders, we don't have a daily sell signal just yet, but we are about an inch away. And if anything, we might have one tomorrow morning at the open. Very, very close to a daily sell signal, and we are right on top of that weekly 21. That could be a spot for a bounce. And frankly, I wouldn't be too surprised if that is a decent spot for a bounce. But I think given all the damage here across our lower time frames, they got a 15-minute sell signal, they've got a 30-minute, a 1 hour, a 2 hour, a 4 hour. Even if we get a little bounce here off that weekly 21, I'm not too convinced it'll last. And I think the bigger problem is really the QQQ. From a weighting perspective, we got earnings coming up this week. Microsoft, Meta, Tesla, and Google. Those 4 names make up about 15-20% of the entire S&P 500. So as we all know, technology stocks are really, really big and a really important part of this market. The QQQ having a brand new daily sell signal, I think would imply the S&Ps, they might be in for a continued rough ride lower. And then the small caps, the IWM, not the prettiest by any stretch of the imagination. Brand new weekly squeeze. The indicator goes from bullish to neutral. From blue to green, we got to close back under the weekly 21, and we've also got a daily sell signal here. Potentially this week, they might want to take that lower for a test of that 200 SMA. Right around 189.60-ish. And then the Dow Jones. Everybody's favorite, the big Dow Jones. Little bit of a pop there on Friday. A little bit of a pulse from the bulls, but not a great chart. Daily sell signals under the daily 50, under the daily 21, under the trailing stop. To fix the problems here in the structure, they'd have to take the Dow back above 390 plus this week. I would think a little bit unlikely. And then the weekly chart has gone from bullish to neutral. And we're right on top of that weekly 21 EMA. Now again, in an uptrend, whether we're looking at a 5-minute, a 15-minute, a daily chart, or a monthly chart, a pullback to a weekly 21, it's not a bad spot to look for a long. I think the fact the indicator has gone from bullish to neutral, that's kind of our first heads up. Maybe things hold up here. Maybe we're not going to get a much bigger move lower, but the fact we've gone from bullish to neutral pretty much just means things are no longer aligned for that quick, immediate move back up towards those highs. If anything, best case scenario here for the Dow, they hold that weekly 21. They trade that thing sideways for 2, 3, maybe 4 weeks. And maybe from that we get a brand new weekly squeeze. That might be best case scenario. Worst case scenario, they take out that weekly 21 like the QQQ. And then another big chart here has been the dollar. The almighty buckaroo. And they're taking that thing higher here from that weekly squeeze. And it's a good looking weekly squeeze. Fresh momentum cross. It's above the trailing stop. It's got bullish structure. It's got a buy signal. It's got a perfect 12 out of 12. The target here from that squeeze, 107.50 to about 108. Over the next 1, 2, 3, 4 weeks, if they keep on grinding the dollar higher, that should put a bit more pressure on the overall market. Dollar goes higher, S&Ps, QQQ, etc., they tend to go lower. So that is one problem. And then the bond market. I like looking at the HYG, the junk bonds, so to say, and the correlation here. If HYG is going lower, not a great thing for the overall market. And that's a pretty jacked up chart. -6 on the big 3 score, daily sell signal. The structure is broken. And if they can't hold that 200 SMA, we got a few squeezes here. A 3-day squeeze and a weekly squeeze. So I'd imagine if they take out that 200 SMA, that might trigger that 3-day squeeze to break short, which of course could take things lower. If they fire that 3-day squeeze short, they might wake up the beast here on the weekly chart, which of course could lead to a pretty big dump. So we got to keep an eye on the junk bonds, got to keep an eye on the dollar, and then volatility, the VIX. So here's my thinking. As long as VIX is above, call it $16, I think there's room for more downside. Nice and simple. And then we got earnings. So get your popcorn ready. We had Netflix last week, and Netflix typically kicks things off for the big boys. A little bit ugly. Down about 10%. And like we talked about on Thursday night, that gap down, pretty good chance that fires that daily squeeze short. And they did exactly that. And then we got a 2-day squeeze setting up here. So again, not the best earnings reaction. Now the thing is, let me get ETFDB real quick. Of course, Netflix is a big company. It's a big market cap kind of stock. But as far as the weighting goes, it's not a big piece of the S&Ps of the QQQ. Meaning they can gap it down 9 or 10%. That can have a little impact on the overall market, but not a huge impact. Where if you look at the QQQ holdings, Netflix I don't think is even top 15. That might be the S&Ps. Let me see. Yeah, so for QQQ, Netflix is only about 2%. And like I mentioned this week, we've got Tesla, Google, Meta, and Microsoft. Collectively, they make up about 15-20% of the QQQ. Which of course would imply if Microsoft or Meta or Tesla or Google, if they're getting thumped like Netflix, and they're down 5, 6, 7, 8, 9, 10%, that could have a much bigger impact on the overall market. And then as far as the spiders go, I don't think Netflix is even a top holding. Let's confirm that. Netflix. Yeah, nowhere to be found. Where Tesla is 1%, you've got Google Class A and Class C. That's about 4%. Meta is 2.5%. Amazon is about 4%. Nvidia is about 5%. Apple's almost 6%. And Microsoft is the most heavily weighted stock at 7.2%. Again, meaning this week, earnings are going to be much more important. Netflix a bit ugly, but if we get that same kind of ugliness from a Meta, a Microsoft, a Google, you look out below. And we'll take a quick look here at them. Let's go see Meta. Down about 4% on Friday. And very much like Netflix, a lot of these big boys, the heavy hitters, so to say, a lot of them are going into earnings with bigger time frame squeezes. So very much like in Netflix, if they gap it up or they gap it down, that can trigger those bigger time frame squeezes to fire long or short. So taking Netflix, for example here, gapping down out of that range, firing that daily squeeze short, pretty good indication moving forward the path of least resistance might be to the downside. So for Meta over here, if they gap that down, they might fire that daily squeeze short. If they fire that daily squeeze short, they might wake up that 2-day squeeze. We got that squeeze on squeeze action. And then Tesla. Very naughty action here from Tesla as of late. Brand new daily sell signal. The daily squeeze just fired short. And then we got that big whopper of a monthly squeeze. If they gap that down after earnings, I think we see that monthly squeeze break short. If that monthly squeeze breaks short, I think at a minimum, and not the day after earnings, not the week after earnings, but moving forward, if they gap it lower after the announcement and fire that squeeze short, I think Tesla's got a path here to about $100. The squeeze calls for a move down to 61. I think 100 might be a good landing spot. Big round number, big psychological level, and also some previous support. And again, like I said last week, the squeeze is the buildup of energy. You're gearing up for a big move. During the gear up, if they can cut the thing in half, from 300 to 150, if they can cut the thing in half inside the squeeze, when the squeeze fires, when all that pent-up energy gets released, they can definitely take it down another $50. Potentially much lower. So I think earnings for Tesla will be very important. And then what about Microsoft? Yuck. Yuck, yuck, yuck. Man, did we get lucky a couple weeks ago. Boy, did we get lucky. We bought those calls. The stock gapped down. By some miracle of the market gods, the calls made money, and we got out of there just in time. I think by far our ugliest winning trade ever. But Microsoft, you have a daily squeeze breaking short, and then a 2-day squeeze and a 3-day squeeze. All right, same rules apply. And then Google. Interestingly enough, Google's got a brand new daily squeeze as of Friday. So the same rules apply there. And then Amazon's in a few weeks. Amazon has a 2-day squeeze and a 3-day squeeze. And the daily squeeze just broke short. And then Apple. The Big Apple. A little bit more like the Big Ugly. Sell signals across almost every time frame. Brand new daily squeeze just broke short. And they're going to go into earnings most likely in a brand new 2-day squeeze with a 2-day sell signal. So that'll all make for a big 1 or 2 weeks here. Going into earnings, a lot of squeezes, a few of them have sell signals, and a lot of them don't have the best structure. So that shall not be dull. And I think, again, that could have a pretty big impact on the overall market. And then the sectors. Let's jump sector to sector real quick. XLK, the tech ETF. Slammed. A big old slamming. First daily sell signal since last October. They fired that daily squeeze short. They took out the weekly 21. Slicing through it like warm butter. And now we got a 3-day squeeze setting up. Not pretty. The healthcare sector, XLV. Not pretty. Brand new daily sell signals. And a break of that 21 EMA on the weekly chart. What about the financial sector, XLF? Not a bad bounce on Friday. Is it the first thing I try to short? No, I don't think so. I think there might be a few things that might be an easier short. But would I buy it? By default, based on the S&Ps and the QQQ, I don't think I'd buy much right now. But as far as XLF goes, with a -1, yeah, I'm not going to buy that either. What about the industrials, XLI? I wouldn't buy that. What about biotech, IBB? Yeah, I'm not buying that. What about utilities, XLU? Okay. All right. 8 out of 12 on the Big 3 score. Slingshot squeeze. Good structure. Above that trailing stop. So yeah, I tell you what, you put a gun to my head. If I gotta buy a sector here, I might go look at the utilities. They hold up a lot better than the others. Now, what about the semiconductors? A very important part of the market, SMH, down about 4.5% on Friday. Daily squeeze fires short, and we're very close to a brand new daily sell signal. And I think a big part of that flush there on Friday, Nvidia down a cool 10%. Very nasty stuff. We're not too far from a daily sell signal. We've got sell signals on the 4-hour chart down to the 5-minute. And then where's that weekly 21? A little bit lower down here around 720-ish. Which means Nvidia's about 4 or 5% above weekly support. Meaning they might take it down another 3, 4, 5% this week. Got a little gap fill level here. You got that weekly 21. But as far as, can Nvidia save the market? Not with that kind of action. Quite the fall from grace, if I do say so myself. And then AMD's got a daily sell signal. And AMD's looking like it might want to test that 200 SMA. 140, 135-ish. And then you got Broadcom. That's looking like a daily squeeze that might fire short. LRCX. No bueno. AMAT. No bueno. And then one more sector here would be energy. And the thing about energy is it's got a beautiful monthly squeeze. So a lot of you know, I've been waiting for a pullback here. Been waiting for a pullback to buy, with the thinking being they can take that monthly squeeze up into 100 or maybe about 105. And that might be a legit idea still. I think at a bare minimum, you want a couple more closes back above that daily 21 EMA. Ideally, a couple more lower time frame buy signals. And then what I think would be really cool here would be a brand new daily squeeze. The bigger problem is, if the S&Ps keep trending lower, if QQQ and the small caps in the Dow, if the indices keep on trending lower, can energy buck the trend? I think given that monthly squeeze, they might be able to buck the trend, but it can be a little bit tricky. So energy holds up pretty good. The utilities look pretty interesting. But at the end of the day, we got to get through big earnings. And I think, again, until things really, really change, the quote-unquote easy money, I think is shorting the bounces. And if you can do that in the QQQ or the S&Ps, I think you cover all your bases. And then heading into this week, we are short Roblox and Cisco. So for Roblox here, I like the short. Trades under the 200 SMA. It trades under the 21, under the 50, under the trailing stop. The daily squeeze fired short. And now we are coiled up here like a rattlesnake in that 2-day squeeze. So I like our Roblox short. And then I like the Cisco short. But I'll be the first to admit, Cisco's been a bit of a pain in the ass. Excuse my French. But a little bit irritating. Right? The S&Ps puke. The QQQ gets hammered. Everything going lower. And then there's good old Cisco. Just kind of floating around in no man's land. It's not breaking any rules. We're not losing our daily sell signal. They're not taking it back above that daily 21. But at the same time, we're not breaking any records here. So I'm trying to be as patient as possible. Focus on the structure, focus on the signals. And I love that 2-day squeeze for a short. Like we talked about, though, the one tricky thing about the short here, it's a pretty big level of support. Back from last winter, and then again back here in March, and now here we are again. So in most situations, that would imply one of two things. One, they can never break support. They pop it back above that 21 EMA, and we're taking off that trade for about 20 to 25% loss on those puts. Option B, the desired outcome, they finally take out the lows here, they break support, and then I think very quickly, they're going down to about 47 bucks. At which point we'll have a nice profit. So I'm trying to be patient on Cisco. I like our Roblox short. And then a couple more here from the scans. Datadog's pretty interesting. If they can take out support, I think that'll dump. And then, what was the other one here? EMPH. However, they have earnings. Earnings on the 23rd, so we'll wait off, we'll hold off until earnings. We'll take a look after that. And then for a short the bounce kind of idea, you got the QQQ itself, the S&Ps themselves, and then ARC. I would love the short ARC on a rally. I would look at a short on Pinterest on a rally. Workday. SWKS on a good rally. And then EXPD. I think you could short any of those on a good bounce. But frankly, if we get a good bounce next week, I'd much rather short the S&Ps of the QQQ. Even though Cisco might work, you can see some of that frustration, right? Down goes the S&Ps, down goes the QQQ, everything's getting spanked. And then the one stock you shorted is just kind of floating around. That can definitely be a bit irritating. So therefore, if we do get a bounce this week, priority number one would be shorting the S&Ps of the QQQ. Nice and simple. One thing to focus on. And again, they kind of got all the bases covered. But alright, my friends, that is my story, and I am sticking to it. Shall not be a dull week. We got major earnings. And then a quick look here at the economic calendar. Always got to keep an eye on that. What do we got on the agenda this week? Tuesday, not too much. Wednesday, nothing big on Wednesday. I think Thursday is going to be the big one. GDP report and the jobless claims. And I can't believe my eyes. No Fed speakers. Wow, I can't believe it. Not a Fed speaker in sight. They must be getting on their yachts. They're taking a week off, going to their private islands. I can't believe it. No Fed speakers. But alright, guys, I am excited for the week ahead. Shall not be a dull one. And again, I think a good rule of thumb, you can get really big bounces during a pullback. Anchor to a buy signal. I wouldn't get long on a 1 minute, a 2 minute, or a 3 minute buy signal. I think at a bare minimum, wait for a 5 minute. With the complete and total understanding, if you get a 5 minute buy signal and you go long, you are going a bit counter trend. That 5 minute buy signal has basically got to put the gloves on and duke it out against a 15 minute, 30 minute, 1 hour, 4 hour, and eventually a daily sell signal. Meaning that 5 minute buy signal might be a very short lived event. But you buy it when it goes green, you take it off when it goes blue, and if you can at least do that, you shouldn't take on too much damage.